for anyone that is not aware, the PMI it's a survey-based data point that basically gets out to a whole bunch of different business leaders in manufacturing. There's two parts of it. One is the conditions report, which was a good beat, but the prices paid for what they're actually spending their money on is actually going down. So it's kind of mixed for inflation. Typically, when that's both the same way, it's kind of good. You'd expect a good solid grounding for a rate rise, but right now, people are looking for reasons to get behind the US dollars. This one was a bit of a mixed one. So the USD was a bit flat across the board. You'll see the futures themselves kind of slip back a little bit. The spot price that we show kind of flatlined a bit as well. So not too much overnight.
Okay. And not too much news coming out of the Middle East.
Yeah, it was pretty flat one as well. There's conflicting reports between Netanyahu and Trump as to what's going on with the fighting itself. I think Trump's trying to play it down. Netanyahu's trying to be the big hawk and say, it's still on. But the key takeaway for this is that traders are very much looking at the market going, well, a peace deal is still possible. It's still there on the table. It's not priced out yet. And traders are kind of playing both sides of it. So we saw a bit of a bounce on the back of that last night.
Okay. And unemployment out of Europe coming out higher than expected. So a big drop in Europe.
Yeah, look, it wasn't a huge drop, but I mean, the fact that it's dropping when everything else is kind of flatlining is a bad thing in itself. The Eurozone hasn't had great numbers in pretty much anything in their manufacturing or anything like that recently, so they're not looking great right now. Their real interest rate, which is kind of the real key driver of their currency, has actually slipped below the US for the first time in a while as the US has been repriced. So they've now got a negative real interest rate against the US dollar, so it's not a great sign for the euro.
Okay, thank you. And today we've got the core CPI data coming out.
Yeah, again. So this is going to be pretty big for the Eurozone. Any miss is going to probably get lashed onto and be met with weakness pretty much across the board. I would say all Euro crosses, probably the stocks index, Euro stocks index as well.
Okay, so a couple of sort of bad announcements in a row.
Yeah, exactly. Yeah. So they've had a few the last few months. So things are going down for the Eurozone, but they're kind of trending up for the US. So.
And the job openings in the US, how's that looking over there?
Yeah, look, so this is a print of basically all the job ads in the US. It's a reading of what's out there, how many jobs are out there on offer, and kind of an indication of expansion, if you will. So the US has had a few good data points as well. The market is pretty much just looking for more signs of their exceptionalism versus things like the Eurozone and other major nations. So, I think if it's negative, it probably won't be too bad, but if it's positive, then you probably get some good US dollar strength off it.
Yeah. And so why do they go down this route of using the job openings versus a full-blown unemployment?
Well, the unemployment it's a looking back data point, whereas this is a forward-looking point. This is who is going to have a job in the future, whereas the unemployment is who's been unemployed in the past. So this is a better indication of what's going to happen in the future.
Okay, cool. Thank you. So some big moves in gold.
Yeah, it was a good one. Obviously, it's pretty much doing the opposite of what oil's doing at the moment, right? So USD had a pretty flat day against most things. Gold, as you can see here, is trending downward. It's caught in a little range between, I think that's a 50 and the 200-day moving averages. It's just trending back down towards that down channel. It really is probably going to take something out of Iran one way or the other to break out one way or the other.
And oil again, I know obviously Jack's spoken a fair bit about this, but a bit of a longer term chart here.
Yeah, I like to look at the longer term to see what's actually happening throughout the market and where we can kind of look for the next few days as a bit of a talking point anyway. So you can see here, it's quite clearly, it's a bit of what I would call a bit of a pennant there. It's kind of on the bounce off the bottom of it. I think it was 3.82% move. Oil tends to go in big clumps, so 3%, 4% at a time. It's kind of down towards the bottom of its range, and it looks like it's potentially going to turn back towards that midpoint, which I've kind of highlighted there, which, that would be, another $8. You're looking at another 7 or 8% potentially upwards there.
And obviously, anything coming out of the Middle East or Trump could have a massive
Yeah,
impact
exactly
on
right.
that.
This is the thing as well. Anything definitive that comes out is going to tear this chart apart. You know, anything that looks like it's peace potentially could break down that bottom trend. Anything that looks like there's going to be bombs flying, you probably expect to hit back to that top again.
Yeah, I think it's an important note. Obviously, we've talked about how CFD traders, they love this type of technical analysis, trying to predict where the market's going to go, whether they're range bound, whatever it may be. But like Keir said, one single announcement over the weekend or coming out of Trump or a natural disaster, for example, everything just goes completely out the window. So very, very more sensitive to those types of big external events than the actual tracking between these ranges.
Yep.
The S&P 500.
Yeah, like I kind of cheated on this one. This wasn't a huge move. I just wanted to kind of show this because I've got a chart. The chart of the day is kind of linking back to this. So it was a 0.2% gain. It's kind of like it's come back off a little bit this morning in the very start of the open. But you can kind of see it's showing little signs of topping there. Potentially that can be wrong, but across the board, it looks like it's starting to show signs of fatigue. You can see the RSIs down the bottom there hitting 70. That's a good indication that's overbought. And you probably expect a little bit of a pullback from here.
Yeah, I think a lot of people have been questioning with all the conflict that's going on and the uncertainty around the world that we're seeing such strong numbers and keeping on going and going. So
we'll show that in the chart of the day. We'll kind of pull that apart a bit.
Yeah. Okay. Nice one. So some big moves by Bitcoin overnight as well.
Yeah, this is an hourly chart. This is just I just found this a pretty interesting one. It's kind of fallen out the floor there. You're going to see it's broken through the trend back down towards 70,000. I'd probably expect it to consolidate around here. I don't know if it's going to have another big leg down, but the fact that it's kind of broken through that kind of 72, 73,000 it's been bouncing off is probably a pretty significant factor, I think. So probably a good one to talk to your clients about and get people trading on. Very responsibly, obviously.
And as you mentioned, so the chart of the day here, so this is looking at the US 500, which is the top 500 US stocks versus the US 500 excluding those AI-driven stocks, I'm assuming.
Yeah, so this is the blue line here is the Goldman Sachs thematic index, which strips out the top AI stocks basically. And what it shows is since the Iran war started, which is that kind of, I think it's Feb 29, the actual start date, or Feb 27 says there, you can see that as it went down and bottomed out, the AI stocks have taken off and everything else is kind of flatlined. They've come back to just under where they were at the start of the war. So it just lends itself to that argument that there is potentially a bubble building in all the AI stocks. And like you can see, it's 10% since April 1. That's, the S&P 500 itself has averaged 10% over the last 40 years. So, if you think about that, that's a whole year's worth of movement in, 6 weeks. It's a bit too much, really. But you'll start hearing more voices saying bubble, bubble, bubble. But this is kind of pointing that.
Yeah, it'd be interesting to see this analysis against the NASDAQ. And taking out the AI tech stocks versus just your other tech stocks and see what the difference is.
Yeah, I'll see if I can pull it out and do it for the next one maybe.
Yeah, be a good one to look at.
Yep. And this is just another chart that kind of goes in with that. This is just how a bubble sort of goes. You have an innovation trigger that kind of, in this sense, it's AI. You'll see a gigantic leap up in the price and then a peak of expectation and fatigue in the buying, and then what they call the trough of disillusionment, which once it goes, it really goes. But then people kind of get used to the fact that new technology is around forever and it slowly starts building back up. You've seen that with kind of everything from the 1920s with railways down to the 90s AI bubble.
Yeah, I guess as well.
The internet bubble.
I guess looking at this as well, like you talk about, Bitcoin and crypto.
Yeah, all that stuff.
Having this massive run, huge, huge comeback down, and then like we're seeing with Bitcoin, kind of stabilising now that it's been around for a long time.
Exactly. Yeah. It's a great example of it.
Okay, the chart of the day we haven't got round to, but we'll send that round.
The article of the day, I'll pull out the Bloomberg one and send that round as the article of the day. It'll just be the overnight wrap.
Thank you.
Yeah. Any questions?
Yeah, any questions?
Yeah. What drove the Bitcoin drop?
I think it's just USD strength, to be honest. That's what it looks like to me. The USD is kind of gone against a lot of risk assets. You've seen gold itself had a bit of a bounce down. It's kind of not really acting like the defensive asset it used to be, mainly because it's gone so high in the last 6 months. People are now not really using it as a defensive. You see things like the big risk ones kind of had a bit of a sell-off last night. So Bitcoin, again, not really a defensive asset, even though it tries to sell itself as one. It's just fallen through the floor of that.
Thanks.
Yep.
You see these massive returns right now with risk assets and obviously like AI, quantum computing, but you see a large sell-off yesterday on Bitcoin. Can you explain all the divergence between that? Because obviously
there's no real correlation. If you look at the correlation between something like the NASDAQ, which it contains all of those, there's no real correlation between those two. They don't act like... Bitcoin was meant to act as the defensive crypto, but it's never actually acted as that. So if you look at the correlation between crypto and Bitcoin, it's never really been there. When gold was a defensive play and it kind of strengthened, crypto went the other way. And kind of vice versa. When the NASDAQ goes up, sometimes Bitcoin comes along with it, but then I think Bitcoin kind of has had a lot more fatigue in it than the kind of AI bubble. It's probably, if you look at that, the AI bubble is probably halfway through this innovation trigger here, and Bitcoin's back on that little slope of enlightenment, where it's just kind of slowly staying up.
Nice one.
Yeah,
Thank you,
cool.
guys. Cheers.